This is Tyler Jones with Entercom's Oil and Gas 360. Today I'm joined by Mike Howard, Chairman and CEO of Howard Energy Partners. Mr. Howard has over 20 years of experience in the midstream business, from being Vice President of Engineering and Operations at Crosstex Energy and President of Midstream and Energy Transfer Partners before founding his company, Howard Energy Partners, in 2011. Mr. Howard, thank you very much for joining me today. How are you?
Great. Thanks for having me.
Great. Well, if I could just start off asking you, what drew you into the pipeline industry?
It's it's kind of a story dating all the way back from my days in South Texas when I was going to college. I went to school to become a chemical engineer, and I had learned of the oil and gas business from an uncle of mine that was graduated from the same university, and I didn't really know what I wanted to be in the oil and gas business, but I got an internship at a natural gas processing plant that was not very far from the university, and I was able to work at that processing plant while I went to school, and I was able to put myself through school learning the natural gas processing business. And then natural gas processing led to pipelines, led to any number of business lines within the midstream business. And so, it dates back to 1993 from my first internship.
Okay, so you've been in the industry for a long time now. What's changed since you started?
What's fascinating about the industry is this was back when I started. We were a production company, and the pipeline business just supported the producers. They're our production company. So it was Union Pacific Resources, and they were known as a relatively large driller of natural gas back then. Horizontal drilling was brand new, and they were really exploiting the Austin Chalk area. And our job as the midstream guys inside of a production company was just to keep up with the drilling program. Through the years, as the MLP space has grown and the way we finance midstream companies has changed, no longer do we compete for capital from the drill bit. So the producers have their way of getting capital. The midstream companies have a different source of capital today, and it used to be all kind of one source of capital. So now with midstream and how we're capitalized through mostly MLPs, most midstream companies are MLPs. That we have our own source of capital, which makes infrastructure, I think, a little more competitive than it used to be.
Okay, and just speaking about competitiveness, what can midstream companies and MLPs especially do in the current price environment to stay competitive?
What Howard Energy has done specifically is we've looked for diversity of cash flow. So just like you want to manage your retirement investment portfolio, where you want to be diversified in all of your assets, that's the approach that we've taken at Howard. So we have gathering and processing, we have deep water port facilities, we have bulk liquid storage facilities, we have liquid processing facilities, and we have treating, processing, compression, and all the other services within those particular business lines. And so from our perspective, that as you move away from the drill bit, there are still midstream business lines that produce a good revenue through down times. Obviously, gathering and processing is our core business and will remain our core business just because the size of capital required to support that business. But we have a lot of other business lines. So right now in the downturn, we're doing quite well and able to stay very liquid. So when an opportunity comes up, we'll be able to capitalize on it.
Okay. And I did notice that you guys do have a very diverse portfolio of assets. Is there any in particular where you're seeing or you expect to see growth going into the future?
Right now, what's funny is I would have said this back in 2009, but I am a big fan of the dry gas, high volume plays that are still out there to be developed that sit right up against markets. So we all know about the Haynesville, we know about the Barnett, we know about the Fayetteville, but their markets aren't necessarily next door to the production zones. So the two that are on my mind the most these days are anything in the Marcellus or Utica that is high volume dry gas, and anything in South Texas like the lean Eagle Ford that hasn't been drilled much yet. It has in our area in Webb County a little bit by Swift Energy, but not as a whole. It's not been exploited like it could be. And we have two of the largest demand centers at the borders of both those plays. So you have the Northeast natural gas demand right there on the border of Pennsylvania, and in Mexico, which is a huge demand player there, right up against the border of Texas on our pipeline that we just announced there. So we think that in this price environment that you move away from things that you were getting a lot of value from rich natural gas, so things that contained ethane, propane, butane. With ethane and propane, and the prices on that commodity is pretty low right now, so you're not getting the uplift that you have been getting for the last 4 or 5 years. So that's been our focus here lately. You know, we're natural gas people, whether it be rich, lean. We like oil. Oil is going to continue to be important to us, but in this particular commodity, with everything suppressed right now, high volume lean natural gas is what we're focused on currently.
Okay, and you mentioned the pipeline that you're building in Mexico. That's the Nueva Era pipeline, correct?
It is.
What about that project's exciting you right now?
So the thing that's exciting there is that since Mexico is already the largest natural gas consumer as an industry, that their industry is pretty consolidated. Obviously, the CFE is the national electricity provider down there. Pemex is the national oil company there. And so traditionally, Pemex has supplied the molecules to the CFE in order to power their gas plants, their power plants, or other industries. Well, now with the reforms going on, CFE can actually go contract for these volumes themselves directly. So when you have the largest user of molecules of hydrocarbons from being able to access molecules directly in the U.S., that's a perfect position where we sit on the border. We're 6 miles from the border. We transport a tremendous amount of natural gas where we want to connect the largest industry to one of the largest producing basins directly. We just think that's a natural fit. We think we're more competitive price-wise than the other pipelines doing that are laying to hubs that get gas from a lot of different areas. We think that in Mexico that part of their portfolio of energy should come directly from the producing regions.
Okay, and how is that reform in the Mexican government as far as Pemex is no longer the only company there? How has that affected your business?
It's been great. I mean, what it does, it allows a little more for trading to happen across the border with multiple parties. It helps some geography synergies where if you're in areas that don't have pipelines today, there will be a need for pipelines just like ours. Going from Webb County through Columbia into Monterey, there's no pipelines in that area, and when you loop a pipeline, you never want to loop it in the same ditch. You want to loop it in a different geographic area, because when drilling does happen in Mexico, you at least have a backbone, a main highway there that can access that production and get it to market quicker, rather than having to start with drilling the well and having to lay a pipeline 200 miles somewhere. So that's the twofold reason why we really like it.
Okay, and how is your international business different from what you do domestically here in the U.S.?
Well, I'll tell you, that since Mexico nationalized their hydrocarbons in 1928, and so they have not had the experience that the U.S. had in technology, in education, in capital, in a lot of things where they are behind on on everything that I just mentioned. So what that means is there's just not as much competition for all those services today. So being a first mover in Mexico is not dissimilar than being a first mover, say, in the Marcellus whenever it was brand new in 2009. Being a first mover has its advantages. You get to help develop the groundwork in which on how they develop their technology, how they develop their education. And if you can be on the leading edge of that, we think that puts us at an advantage where we can constantly be providing Mexico with a more competitively priced molecule and not have some of the competitive stresses we have in the U.S. with as much money as on the market chasing midstream deals.
Okay, and you talked about how there's an advantage in being the first mover in Mexico. I know also from looking at over your company's website that you guys talk a lot about the advantages of your financial structure as far as your partnership with EnLink and Alinda Capital goes. Can you tell me a little bit about what that partnership looks like and what advantages it brings to your company?
Yeah, that's right. So in most companies of our size in today's environment, there's probably, when I started in 2011 with my own company, we've had about 25 players out there that look like us, that was private equity backed small midstream players, where now there's over 100. And so because of the success of those first 25, more private equity is poured into the market. And what's different about that is the private equity companies, they'll invest and they have a horizon, an investment horizon that they have to meet. So they'll typically be in an investment from anywhere from 3 to 7 years, then they have to sell. Howard Energy was created to be a long-term player. We've never had just one sponsor. We've always had multiple sponsors. EnLink and their predecessor, Crosstex, has been by far our strongest supporter. They've been with us the longest because they were here since day one. And when your capital structure is flexible and long-term thinking, it gives us the ability to think long-term. We're not trying to meet a 3 to 7 year horizon, cash out, and then go start up another company in another basin. We're building a long-term viable business that'll be providing these services for years and years and years to come. So the advantage that we have is we have all the financial strength of the small companies, but we have the sophistication and the internal horsepower to be a very large company.
Okay, and aside from the financial structure and sort of that first mover mentality in Mexico, are there any other things that set Howard Energy Partners apart from your competitors?
Absolutely. We are very heavily engineering and operations focused. It's been my background as well as commercial. We're not run by a financial leader or a commercial leader that doesn't have experience of execution. We are not only myself, but a lot of our people underneath us have lots of years of executing very large projects. So when you look at we have former investment bankers internally, we have former, security counsel and legal counsel on staff internally. Our accountants have all been in the business for many, many years. So we have a very deep bench of experience in this company where most companies of our size have a very limited bench that use outside resources to just get them through so they can flip out of their company. And so our experience is very deep. And so that makes us move very quickly. Our decision making is very quickly, and we execute on very complicated projects. When you look at our history, in 2012 we built a 200 million a day cryo plant. In 2013 we built a deep water port facility in Brownsville, and we started up a natural gas liquids processing facility, first of its kind in South Texas. With our most recent acquisition, moving into another basin in Pennsylvania, we were able to move very quickly for our customer, Southwestern. They needed someone to come in, buy those assets, and they needed to be someone that had a lot of experience that they trusted. They picked Howard Energy as that trusted partner because they know who we are and our deep expertise in what we do for a living. So I think that separates us from our competitors.
Okay, and do you find that the financial structure tends to lend itself well to kind of that deep bench of experience that you mentioned? Does that all kind of work together to help you move quickly on these things?
It absolutely does, because what you'll read about is most people will receive $100 million to $300 million of commitment. What we have is we spent well over $1 billion on assets in the last 4 years, and our commitment is really endless. We can continue to raise capital with our current providers or go to new providers if we all agree that that's the right thing to do. So it sets us up to be very flexible and to continue to grow. We don't have to think about, oh no, let's not spend that money, let's exit so we can get the next round of capital and go do something else. Our money continues to be reinvested in the company to grow the company.
Okay. And then I had just a couple policy questions for you as well. As somebody who's been in the midstream business for quite a while, what are your thoughts on Keystone XL, and why has that been held up when we have pipelines that crisscross the country already?
That's a fascinating political question. I follow probably the same articles in the newspapers and magazines that you do, and it's unfortunate that it gets locked up like that. Thank goodness that we have creative financial structures in this country and creative regulators that are allowing existing pipes to convert service and accomplish the same thing that Keystone would have accomplished. Because having a free market for your molecules solves those problems. If you are constrained to the political whims of any administration, that's a very dangerous place to put your country in. So I think a free market solves that problem, and that's what's happening. If Keystone becomes irrelevant, if railroad is a good solution, if existing pipelines are a good solution, or if someone wants to anchor a pipeline, and do it a different way, it's just that there's a lot of ways around that particular issue. I'm hopeful that as long as we continue to be a free market in the natural gas and oil business, that we'll continue to solve those problems and provide the most competitively priced hydrocarbon in the world.
Wonderful. And if the U.S. crude export ban were to be lifted, how would that affect your business, do you think?
So from our perspective, we have a natural gas liquids is basically a condensate stabilization process that we installed in South Texas in 2013 in anticipation that condensate can at least be exported if it's been processed. We have a facility right along the Gulf Coast there that satisfies the requirements of processing, and so we've been a fan of that for quite some time, not just from an oil condensate export standpoint, but from an oil export. As the U.S. has extracted and learned to extract these tight oil shales, we've extracted hydrocarbon out of these tight formations, that our refineries are not necessarily set up to run this kind of product, where we're importing very heavy hydrocarbon oil from Venezuela or Saudi Arabia, and that's where we've traditionally gotten it from. As our refineries retool to a more domestic supply, and other countries can benefit from our lean production, it goes to further make us independent as a country. And so if exports kind of solve that problem of having to import so much heavy oil from countries like Venezuela and Saudi Arabia, it's a great story for us. It just makes us more independent politically, and I just think it puts us in a better financial situation as a country.
Okay. And Howard Energy Partners is a private company, but is there any scenario in which you guys would consider going public?
It's funny. I get asked that a lot, and I think it's a natural progression of a company of our size to do that someday. I'll say that nothing's imminent, but someday it probably makes sense. I'll tell you, personally, we started this company with no visions of going public because I've been a part of a publicly traded company my entire career. And so it's kind of nice being private.
What about working in the private company is different from being in public? What do you enjoy about it?
So, just the public, being a public company requires you to meet all SEC requirements, and that is reporting requirements that, you have to do a phone call, once a quarter with your investors, or you have to be in the public eye a lot more often, giving speeches and that sort of thing. Where right now I worry about basically three investors: management being one investor, InLink being one investor, and Alinda being one investor. When you become public, you'll have hundreds of investors.
Right.
So you have to be as attentive to those 100 investors as I do my three right now. And so just the additional strain that puts on an organization, but the reason why you do it is because it's a good source of capital to access, and it helps you grow beyond where you are. So there, you have to take the good with the bad.
Absolutely. Well, Mr. Howard, thank you very much for joining me today. I really appreciate your time and insight.
Thank you, Tyler.
This has been Tyler Jones with Enercom's Oil